Alright, hey traders, TG Watkins here. It is September 22nd, Thursday, when I am recording this, and it is the day after the FOMC. FOMC, as typically is the case, did not fail to live up to its craziness and its name. We had a lot of stuff moving around that day, and then we got a lot of follow through to the downside today. A lot of names are breaking down. We did see quite a few names breaking down basically the beginning of this week, because the time to go short from what I was seeing on a fair number of names was Tuesday, so about 3 days ago. Monday, Tuesday, something like that. So this week, and probably going to get some more follow through, or at least some sideways action Friday. I can't really confirm anything yet, but I got some things I want to show you as far as sentiment and all that. Anyway, here was the over at profitpilot.com. This is kind of what we were talking about, the last newsletter, FOMC, all that kind of stuff. 75 basis points raise for interest rates. That was as expected. Fine. Market still kind of did whatever it wanted to do. And yeah, I'm sure all you guys saw this, but wild move down, then up, and then down. We don't often see it like that. A lot of times, kind of the first move is the fake move. So I think I would have expected price to kind of go up and then fake people out and then go down. This went down, then up, and that was the fake out move, and then it rolled over again. So that was real tough, and the internals were swinging around massively as far as that goes. So there were just so much money and force that it took to actually push that around like that. It was crazy. So then we dropped, yesterday, Wednesday, and then today, Thursday, we dropped a little bit, mostly going sideways. So things seem, for as much as everything is bearish, and I get it, stay bearish, stay on the right side of the trade until something else says, there are some things that we might be kind of running into some I don't know, potential support to where we could get a bounce. If we just look at price, we are kind of right here at the bottom of this little range, so that we could still have a little bit more downside. I do think that eventually we are going to hit the June lows. I think that is just baked into the cake, but I'm wondering if there's going to be something that happens first to kind of throw everyone off of the trail. Part of what I'm thinking, and if we look here, let me drag this up. This is, you can see here, it's the sentiment, investor sentiment. I mean, it is high. It is super high, like really, really high. Okay, so that means everybody is loaded on the bearish side and prepared for that. Now, maybe everybody's right. Maybe this is true. Maybe things really do go down, and everyone is correct, because not only are we loaded that direction, also nobody's willing to buy, and so we're just going to keep going on. Maybe that's true. But also we have to think that sometimes when everybody gets on one side of the boat, it tends to go the other direction because everybody's on one side. That's one thing to consider. And then if we come over here and look at this one, a little bit more zoomed out about the sentiment, I mean, look at this. 2008, 2009, basically, so 2000, right around there. I mean, we are right back there. I mean, this is the bearish that we've ever seen in recent history compared to 2008, and we know what that was like. That was pretty wild. So we got a lot of stuff that is either we don't know yet, but is this going to be correct, or is this going to be a contrarian type situation? We might actually see some sort of bounce or move to the upside. Now let me also just pull this chart up here. This is the put call ratio, and I just have it on this one ready to go. It has obviously been very, very high. We've been seeing a lot of prints over 1, and then the blue line is the 10 SMA, and it is also very, very high. The last time we saw this was the June lows, but the June lows was a point in time. Basically, it hit there and then came back. We are seeing this persist, and so that is something really, really serious that we need to be aware of. Now, this is all just kindling. This is something we need to think about. This is all just things to be aware of, things to be concerned about, but it doesn't trigger until it actually triggers. And so while we know this stuff and everybody's kind of loaded on one side and all that, it's not a thing until it's a thing. So we just need to make sure we're prepared about that and saying, don't necessarily go long because of these things and whatever. Just kind of keep that in the back of your mind and kind of be aware that some of this stuff might happen. Now, if we look at the market itself, obviously it's getting a little bit stretched. It keeps getting knocked down. That's fair. The FOMC news did take price right up into the underside of the hourly 50 and got it knocked down. That seems appropriate. It also flagged into the underside of the daily 50. That seems, the daily 8 EMA. That seems appropriate too. And then the only other thing I'm going to say kind of near term is if we look at the 15-minute time frame, and this is definitely something I talk about, and this is how I trade, but when price gets too far away from a moving average, it tends to want to get back to it, whether it does that by time, which means it goes sideways, or by price, which means it's going to have price move up to or down to the moving average, whichever direction respectively. So we can see here, pretty big gap, and what did price do? Got into the 15-minute 50. Pretty big gap, what did price do? Got into the 15-minute 50. Pretty big gap, well, just kind of putting it out there. You know, we might be seeing price either move sideways or up into the 15-minute 50 in the relatively near future. So that's something to keep in mind. And then also, if we look at the daily chart, we take that same concept. Look at when price, you know, got too far away from the 50, came back to it. Even here, like got really far from the 50, came back to the 50. And then finally here, got really far away from the 50, came back to the 50, and then kind of in here, you know, really far from the 50 and then came back. So we are kind of getting to a point where, number one, we are kind of coming back into this potential support area, and we are starting to get fairly far from the daily 50. So just kind of laying the groundwork out there to, yes, you know, things are bearish, but be careful of the contrarian idea about everybody being too bearish, and that something can happen, something can come out of the blue, and you know, we have kindling for a potential short squeeze or short covering rally, anything like that. So yes, some really, really important stuff to be aware of out there. You know, I do talk about the UVXY a fair amount. It has been looking like it's loading up. I mean, this is really, really looking like it wants to set off and go, but it's been staying pretty well contained, especially compared to how much the market has been moving down. So I really, for as much as this thing looks ready to go, I have not been able to find any decent opportunities other than some quick hits here and there. So not much to really say about this. It looks, if this were a stock, I'd be buying the heck out of it, but it's not. It's the UVXY, and all I can do is say, seeing a lot of interesting things here, and maybe someday something will kick with it, but for right now, just not really seeing much. A couple other things I wanted to point out as we kind of go through the market, and let's see, we'll do a variety of things. So SOXX, we got the semis in through here. Now, of course, I do think that the semis are weaker than any other of the indices, because you can see that the semis are already pretty much back at their prior low. They could go a little bit further, sure. But the thing that's kind of calling my attention is, for as much as price has been going down recently, the Moxie indicator, if I can draw that a little bit better, the Moxie indicator has actually kind of been hanging out here pretty well. And if we even look a little bit near term, we can see price has been dropping a lot, and the Moxie indicator really hasn't been going down too much. So that's just another situation that it's kind of, through the Moxie indicator, is kind of trying to tell me that we might be seeing kind of something I feel like is going on, okay? And if we see here, we could see price down, Moxie indicator up. It's kind of the same thing, price down, Moxie indicator up. So I'm just kind of putting it out there. Be careful, trade short, sure, but if something changes, like, get out of the way. Don't go fight something if it's not working for you. So we have that, and then Microsoft MSFT, which is another. We can kind of use this as a proxy for the semis and tech and stuff like that. And let me kind of get this thing worked out. I don't know why it's slow today. There we go. Very similar to what I was just showing you for the semis. We are seeing price down, but notice that the Moxie indicator is kind of hanging up there. And even here, we're starting to see some price kind of move back up to the upside. This is kind of, I think, something to be aware of. The other thing, if we look at the daily chart, we are just slightly, so this could be an undercut. We know that there's a term called undercut and rally, so that's a thing. The other thing to be aware of is that this has been a huge, absolutely huge move to the downside, and very, very, very persistent. And now we've undercut the prior lows. So what I'm also looking at is third ATR, and again third ATR. This thing has just been pushed down so fast and so hard and all that stuff that maybe it's getting to a point where sellers are kind of thinking, we just undercut prior lows. We've got our thing. This has been down quite a lot, and they might be running out of ammunition. And I'm just saying that there could be a bounce back up. It could be kind of like this, because what do we get? Price third ATR got a bounce. 30 ATR, we might be getting a bounce. So I would be watching out for that on the short side. It seems to me things might be getting a little bit tired and exhausted on the short side. And then some of the other stuff that we can be looking at, Tesla, and this was a thing that I was talking to my subscribers today. Let me show you, first off, let me pause this for a second. All right, so we're back here, and what I wanted to show you was on the monthly time frame. So this is something I've been talking about, and I think it's important to know and to see. Granted, now we still have a few more days until the end of the month, so this isn't painted yet. It's not completely set yet. But just from a moving average standpoint, we can see back here, price was following and holding, bouncing off of the monthly 10 SMA, and then we had a transition where price broke through the monthly 10 SMA, and that's a problem. That means that moving average is no longer support. And now look on the other side. Now we are getting rejected by the underside of a downtrending monthly 10. Do you guys see how that is a trend change? That we go from support, transition, resistance. There is something out there that we need to be paying attention to. Yes, I think that maybe near term things could be getting a little bit oversold and a little bit stretched to the downside. But long term, this sure seems to me like this is going to be running into some resistance, and you should be prepared that Tesla overall is probably going to be moving lower, and I would not be looking bullish on Tesla overall. So that's something from a higher time frame standpoint that I wanted to be able to show you guys. We got that, and then we look at Apple, and same thing. This has been pushing lower, lower, lower. But you know what? For as much as we're kind of seeing the market move down and all that kind of stuff, it's been holding up fairly well. And again, with the divergence, we've been seeing price down, Moxie indicator up. Now we're kind of seeing a higher low, Moxie indicator up. So it just looks like it might be hammering out a little bit of a bottom for some sort of maybe possible move up. And this looks like it's having challenges and problems trying to get lower. So there might need to be a bit of an up move before the next down move. Which actually reminds me, I needed one more thing I wanted to tell you guys about Tesla. I was trying to show you the overall longer term time frame, but there were some things on the lower time frames that I actually wanted to discuss. And where it is here on the hourly chart that I wanted to show you is that we've got our first move here cutting down below the hourly 50, and this is fractal. This is the same kind of idea and concept that I just showed you on the monthly time frame, where price breaks through the moving average. It's no longer going up. Like see how price was holding the moving average to the upside. There's your transition, and then what would probably come next? Probably get a move up like this to where price runs into the underside of a downtrending moving average, and then price goes lower from there. So, and we just saw that on Tesla with the monthly chart. Now take that idea, and you can see it's right there also. Notice that price cuts down below the moving average, and then it bounces back up right into the underside of a downtrending moving average, and then you get a move down. So I have a feeling that this is going to be like this, and what that means is that probably at some point we should see price move back up into the underside of the hourly 50. Price should probably move back up to the underside of the hourly 50. So while today has been a pretty good, or yesterday and today has been a pretty good solid move to the downside, there is a pretty good possibility for a bounce, and then I would then look to short the bounce later. So you got to keep multiple thoughts into your head at the same time. The other possibility is that price might bounce off the daily 50 again. So I think it's going to eventually go lower. Remember, monthly chart, I think things are going to go lower overall, but it might come down, bounce, and then cut down through something like that. So that's kind of what I'm seeing as far as a up and then a down. For some other moves, to show you how the Moxie indicator has been working with this and what we've been seeing, and to show you how we can see if price is going to actually fall down below certain moving averages, let's take a look at Ford. And what I first want to show you is the 50, 200, 50 maneuver right there. So I've been guiding people saying, I think Ford is going to go to the 50 and probably below. But how do we know once it finally got to the 50? How do we know if price was going to keep going lower? Well, we look at the hourly chart, and what we could see was that right here, that's the Moxie price trigger telling us that the Moxie indicator is now below zero, and we could see that every bounce over the hourly 50 with the Moxie indicator below 0 was an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0. And so those were false longs or great short entries. And then what you could see was right here, price was running right smack into the underside of the hourly 50, again with the Moxie indicator below 0. So for one, when these were poking up over the 50, those were false longs. And number two, you can see when price actually got exactly rejected by the hourly 50, those were confirmations of resistance overhead and price likely to move down. And then it took some news to actually really push price down through the 50, but it was all baked into the cake, into the charts already on that one. GT was another one that I was looking at as far as some pretty good Moxie type setups. And you can see the similarities here very, very close to Ford. These are the kind of consistencies and setups that I look for and that the Moxie indicator can help you kind of find and figure out. So when we get this thing loaded, there we go, and we can see another 50, 200, 50 maneuver right in through there. And then again, how do we know if price is going to fail through the 50? Well, we keep looking at the lower time frame. Number one, yet again, there was an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0. We had it again. Price should not be over the 50 if the Moxie indicator is below 0. And then you could see where price was trying to figure out if it was going to hold that low. It failed and failed and failed. On the 15-minute time frame, that was also fairly clear. You could see inverse trampoline move, exact, and then rejection by the 15-minute 50. So really the bigger picture was the 15-minute 50 was in a downtrend. You even see the hourly 50 was in a downtrend, and every bounce was something to sell into. And then we had price just cut right down below through the daily 50. So those were those moves. Now, do I see anything else on these things? Not yet. Are they getting oversold? Maybe. But do I see a bounce? Not quite yet. Would I take a long? Nah. So just make sure you stay on the right side of the trade until something else really happens. So that's that. And then I think ENPH was another one. We know that solar has been very, very strong. And, for a reason, government money going in there, awarding contracts and all that kind of stuff. So a lot of people have been talking about ENPH, relative outperformer. And I said, okay, sure, for a while. But I said I really had my kind of concerns. People were really trying to look at going bullish on ENPH and through here and calling it strong. And I was like, nah, I don't think so. For a while, yes, it was following the hourly 50 and the daily 21. But really, if you look at the Moxie indicator, right here, you could see it really wasn't that strong. It was up, down, and really just couldn't make any progress. And you could see we had, mix, green, red, so that was a problem. It was telling you there was some indecision, there was some chop back and forth as far as momentum goes. And then if we look at the 15-minute time frame, look at the Moxie indicator. It barely made a peak over here, and then it got underneath there, and then this was really bad. You could see that the indicators were spread. One was over 0, the other one was below 0. It just wasn't looking good. The other thing to note was that price kept chopping above and below, above and below, and above and below the 15-minute 50. There was no traction. So this is kind of an example of where just price wasn't able to engage with the moving average. It was problematic, and that the Moxie indicator also really was not looking good. So that was a kind of a sign and signal that nothing could get traction. It wasn't looking good to the upside, and then of course it let go with the rest of the market. So that was the sign and symbol for you guys to be aware of it, that it wasn't really going to be working out, and to be careful and safe about that. All right, so that was ENPH, and then I'll show you one other, then I'll wrap up here. So BE, Bloom Energy. We could see this one was another big move, again with the Inflation Reduction Act, all that kind of stuff. I could almost say that this is a 50, 250, but more what would be appropriate is that there was just a really big gap between price and the daily 50. It got very overbought, and you can see here that it's been making its way back down to the daily 50. Now, how do you make sure you don't go buy it in through here thinking, oh, this thing's going to keep ripping and roaring? Well, what you do is you go look at the next lower time frame. Notice, inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0. Same thing here, inverse trampoline move. And then what you could see is right here and right here, price continued to get actually technically rejected by the underside of the hourly 50, and the Moxie indicator was nice and red. So those again were also confirmations that this thing was going to be heading down in this situation. So those are some things to kind of point out that the Moxie indicator can help you with your trading and what you're looking for in the market and to basically keep you on the right side of the trade, not get suckered into some of these bounces that actually end up to not be anything. All right, guys. Well, thanks again, and I'll catch you at the next one. Be safe out there. Keep in mind what's going on at the market. Stay nimble, and don't get too locked in on one side. This market is all over the place. All right, guys. Take care. Talk to you later.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.